Let's be honest, private cryptos are not as cool as it was once. This may have been happened after the FTX fallout in 2022, hurting some of the trust people had in crypto. Still in 2023, there was a vibe that digital currencies like Bitcoin and Ethereum had a chance to recover and go green. But as 2023 went, according to one report, it felt like market sentiment went from fear to greed to neutral. With India being the G20 president, there are global crypto regulations being discussed. In India, the use of crypto as a form of payment is not regulated yet. India's Finance Minister Nirmala Sitharaman has suggested taxing digital assets. But whether these currencies are even legal in India is another story. But in India, there is an alternative to private cryptos. Who is heading the alternative? Its name is the Indian government. Yep, the Reserve Bank of India launched a pilot project on the central bank digital rupee in December 2022, also called the CBDC. It's like a digital version of money the RBI prints, the rupee. When Indians use the rupee in transactions, India's central bank controls and makes sure everything is okay. With CBDC, they are making a digital version of that regular money. It's like a new way to use money but still run by the government. Is it going to finish flat currency? Experts say it's going to complete physical cash, not replace them. So you would have one more option to make payments in addition to taking out your wallet and pulling out a couple of notes. What does CBDC mean for cryptocurrency? You can't really make a direct comparison between the CBDC and private crypto. The principles of crypto are independence and autonomy. Crypto is commodity, it's a virtual asset, it's decentralized. The CBDC is a digital fiat. Private cryptos are alternative forms of payment with unique algorithms. These private cryptos are independent of central banking authorities, and there's a step-by-step procedure that goes from mining to owners to transferring assets. The CBDC is solely under the purview of the RBI from misusing it to tracking it. The CBDC also uses the underlying tech behind crypto blockchain, but not exactly. Transferring e-rupees to people would happen through a token-based system. If Kavita is transferring $50 to John, Kavita would need John's public key and a unique password in the form of a private key. And there is no earning interest as such. If an e-rupee earns interest, then people would just withdraw from the bank and convert it into digital form. Transactions can be person to person or person to merchant. You can transact with e-rupee through a digital wallet. A private crypto doesn't have any intrinsic value and its price could be held hostage to speculation and volatility. Not the CBDC though. If anything goes wrong with CBDC transactions, take it up with the RBI. There are authorized and private blockchains which aren't decentralized and which the CBDC operates on. And private cryptos operate on permissionless and public blockchains. A crypto like Bitcoin is capped at 21 million coins, so it's finite. But the CBDC supply can increase. Before the FTX debacle, private cryptos were said to have already shed about $2 trillion in value. So there may be a vacuum left, maybe or maybe not. With 100 rupees in my mobile wallet being 100 rupees being held digitally, will that fill the gap? Some say this CBDC would be a distant cousin to crypto. The RBI is very clear though. The digital rupee is centralized, so any threats that a private cryptocurrency could have to the financial system of India are not there with the CBDC. But does one affect the other? It seems like CBDC and crypto serve different goals. Private cryptos are there to be digital investment assets, and CBDC are there to be a form of payment, but it's not really for investment. In fact, one may benefit the other. The CBDC may popularize digital money and wallets and may even lower the barrier for the entry for crypto assets. Will that mean that more laypersons would be open to adopting crypto? Maybe, maybe not. The Indian government seems to have taken a stance that it's not going to be an El Salvador situation where private crypto becomes legal tender. It thinks there could be implications on financial stability and national security, or there could be a tax evasion, terror financing, money laundering, and more. It also thinks that these private cryptos could diminish the potential of authorities to regulate monetary policy. The value of crypto at any point in time may stem from pump and dump schemes from crypto stakeholders. The goal of the RBI with regard to the CBDC may not be to make people move from private virtual currencies to this digital currency. So maybe a CBDC in the future would have some interesting characteristics. In India, CBDC could digitally represent fiat money that could augment trust among country people. If tomorrow the RBI decides to outlaw crypto as an asset class as a whole, or allow it to only be a currency and not an investment asset, that could mean the death of crypto in India. If that happens, would private cryptos be delegated to the dark side of the web? What about something like stable coins? Think of a special coin that can buy 10 chocolates, but this coin doesn't change its value. This special coin is called a stable coin because it is set to stay stable. Imagine that this coin never changes its value and helps you buy things without worrying about the price going up or down. Stable coins are a form of crypto just like regular crypto like Bitcoin or Ethereum. But there is a big difference. While the value of crypto can go up and down a lot like a roller coaster, stable coins are like a steady train ride. They are designed to stay close to the value of something stable like a regular currency or even something like gold. The RBI has said that it does not believe that stablecoins should be accepted blindly. In 2022, it is said that CBDCs could kill whatever little case that could be for private cryptos, and there is even hope to use CBDCs for cross-border payments. These are payments where money would be transferred between different countries and currencies. And if the RBI then evolves CBDC to have some investing characteristics, it puts them in a privileged position, which has to make you ask, does that mean that the government could have monopoly over the digital space? As of July 2023, CBDCs are said to have 1.3 million customers and 3 lakh merchants using the retail digital rupee. Close to 15 banks are said to be offering retail CBDC. Between 5,000 to 10,000 transactions are said to be done per day using retail CBDC. RBI Deputy Governor T. Ravi Shankar said they were targeting 1 million CBDC transactions per day by the end of 2023. And if you were wondering about UPI like GPay or Paytm or others, the UPI network could soon be leveraged to increase CBDC transactions. There could be a QR code using the CBDC app. And if the merchant has a CBDC account, the payment could come into their CBDC wallet. It's not just India, even China is said to be leading the charge in CBDC adoption. Can CBDC create more financial inclusion in India? Can CBDC lead to more innovation in the private crypto ecosystem and vice versa? Could CBDCs streamline cross-border transactions, thereby reducing the need for private cryptos? Will CBDC kill crypto, or is there scope for coexistence?